and welcome to the Financial Room. I'm your host once again, Natasha Bridgmohan, and we are going to be talking about the Bank of Mom and Dad. That's our topic. Yes, you heard us right. Bank of Mom and Dad. It's all about parents who help their children with support of down payment for a mortgage. Now, recent statistics have shown some very, very interesting facts, and one of the most interesting facts is 2012, the average condo purchase was a mere $286,000, if I may say. Today, it's well over $550,000, almost double in less than a decade. What does this mean? That means Bank of Mom and Dad is stepping in to help their children afford home ownership in all over our nation across Canada. I just want to talk to you about some interesting things that I need to help parents understand and children who are receiving funds from their parents, just to make sure that you are protected and both parties get the best advice and to avoid any conflicts or disagreements, because the number one issues family usually have is in terms of conflicts is the topic of finance, and it's a very sensitive thing. Now, if you are a parent and you are willing and able to gift your child funds for down payment, that is an awesome thing to do, but make sure that that child understands that it is truly a gift and there is no repayment for the gifted amount. So that's very, very important. Now, if you are a parent that is borrowing funds to lend to your child for down payment, it's very, very important that you sit and communicate with your child and educate them that, hey, this is what mom and dad can afford to give you. This is what the bank is charging us if it's a secured line of credit. This is how much the monthly interest is going to be, and create a binding contract so that child respects the sacrifice and time that you have taken and the risks that you've taken to give them these funds. And there are no surprises in terms of the repayment terms, the timeline, and how many times they're going to be paying you and how long it's going to take over the course of that loan, whether it's a year, 2 years, 5 years, 10, may it be that's fine too as well. So very, very important that the message is really, really clear. If you're loaning the funds to your child and the cost of borrowing is not clear, or it's from your registered account or your savings account, but you do want to charge them interest for whatever reason that may be, that's fine too. Make sure that you sit with them and you have a written contract too as well. So the stress test has changed. Will be changing. Rates are really low right now, as low as 2.45% for mortgages. So if you are a parent or you are a person who's buying a home right now and you are thinking about gifting funds and increasing down payment for mortgage affordability, this is the time now for you to think about having a really mature conversation with your child to make sure that they're understanding the terms and the agreement. Now, stay tuned for the end of our episode to look at information on any upcoming workshops or events. And as always, our episodes are great, informative to help you change your life. We're going to be talking about financial emergencies next week, the top 5, and no, planning a wedding is not a financial emergency. And as always, the Bridge Group of Companies is your home of your financial needs. Follow us, search us anywhere, #ChangingLives, #home of all of your financial needs. As I mentioned, I'm so happy that you're joining us today, and have a wonderful holiday season that's coming up.